Alright guys, it is me again. Market closes up here in like 10 minutes, so let us do a bit of a recap. What a nasty day. So, in the pre-market prep video, brought you guys the idea that maybe, finally, fingers were crossed, we might get the short squeeze here today, giving us a much better entry for some shorts, because I want to short the shit out of this market. You know, we're up 1% and change into the open. We flush after the CPI numbers get released, then we pop again. We're up 1%, and then we flush, and things get a little bit nasty, guys, here into the close. So, S&P 500 down 1.5%, the QQQ down 3%, Amazon down 3%, Facebook down 4.5%, Tesla down freaking 9%. It's a bloodbath, guys, so if you're short, this is it's heaven on earth. If you've been wanting to get short and you've been wanting to wait for a bounce to short, it's frustrating as hell. So, you know, the thing about rules in trading, we love our rules when they get us in and out of profitable trades. We love our rules when they're making us money. Rules can get frustrating when they're keeping us out of trades for good reason, but we're not taking part of any of the action. So, as a lot of you know, one of my rules is I cannot and will not look to get short at -2 to -3 ATR. If the market was bullish, I don't want to get aggressively long up here at 2 to 3 ATR. And the thing is, we can find examples throughout the history of the market where getting long at 2 to 3 ATR or getting short at 2 to 3 ATR will make you some money. But in terms of the probabilities game, 80-90% of the time you get aggressive at these extensions, you're going to get your teeth kicked in. As I say that, we have to keep in mind, this is a vulnerable-ass market. This could easily trade lower and lower and lower. So there's no promise, there's no guarantee that I'm going to get a better entry for shorts. But what I'm not going to do, guys, is break my rules. As unfortunate as that feels for me today, I did have a Facebook short. Took that off today for $1,000 or so. But outside of that, guys, I think I brought you a video last night or Monday looking for a move on Apple into 145. Son of a gun, here we are. So, it stinks, right? Big part of trading is you can find a setup, you can put together a game plan. You just might not ever get your entry. I never got my entry here. So, Apple's down 5.5%. Weekly squeeze looks like it wants to roll over. So, here's the thing, guys. If you think the market can't trade any lower from here, the weekly squeezes in the S&Ps, the Apples, the Teslas, they would beg to differ. Weekly squeeze fires short. Rule of thumb is we're looking for 5 to 8 weeks of momentum. So for the S&P 500, this officially fired short on Monday. This opens up the potential for 5 to 8 weeks of momentum to the downside. If you think Apple can't trade any lower, it's in a bearish weekly squeeze that still hasn't even fired short. If you think Tesla can't trade any lower, even though it's down 9%, it's in a bearish weekly squeeze that still hasn't fired short. So whether you're looking at the S&Ps, you're looking at Apple, you're looking at Tesla, the current structure suggests there's huge potential here for 5 to 8+ weeks of slippage to the downside. So in terms of trying to fight the FOMO, I would like to think, and I'm also pretty confident, sometime, somewhere between now and 5 to 8 weeks down the road, we're probably going to get a bounce. We're probably going to get a huge bounce. We're probably going to get better entries for the short side. So for today, guys, I am sidelined, missing all the action. Never fun, but got to stay disciplined. So with all that being said, nothing really changes. We've been looking at a market where we've known the path of least resistance is to the downside. We've been looking at a market where we know this thing can trade much lower. None of that changes. One interesting observation, though. On a day where the S&Ps are down about 2%, the QQQ's down 3% and change. Names like Amazon getting freaking smoked. Names like Tesla getting bent over and spanked. One would think the volatility index probably pops on the day. VIX is flat. don't think I read too much into it, but interesting. You've had ticks at minus 1,000 almost all day, indices down 2 to 3%, market-leading names, heavily weighted names down 5, 6, 8%, volatility is flat. So, riddle me that. Interesting if nonetheless. But for tomorrow, guys, biggest thing on the agenda is going to be the PPI, let me see if I can get the exact time that comes out. Well, y'all can look up the time, but pre-market tomorrow we are going to get the PPI, the Producer Price Index. In terms of a catalyst that could send the market either which way, that could be it tomorrow. So, as we're deeply freaking oversold, as the put-call ratio is back up here at 1, folks getting heavily short, any kind of good reaction to the PPI number tomorrow could trigger the short squeeze. With a very vulnerable market, with leading names breaking down, with monthly charts breaking structure, weekly squeezes, etc., any negative reaction to the PPI tomorrow could trigger an all-out bloodbath. And in that event, I don't think anything survives, guys. So where I'm being careful right now is on these bullish opportunities in names like XLE or names like USO. If this market can't hold up, if we can't get any kind of bounce going, we might see a point where they start to sell everything. Keep selling tech, sell the semis, sell the financials, and now get rid of energy. Get rid of USO. And if I'm a hedge fund manager, I might consider it. My clients are getting killed on big tech holdings, on semiconductor holdings. If I've been doing my job, we might have some open profits from the last 4 months on energy. My hedge fund is getting smoked. Last thing I want to do is let any profitable position on XLE turn into a loser. So we could see that point where they say sell everything. Sell the losers, sell the winners, get us the hell out. So no guesses, guys, on my end as far as where tomorrow goes. All I can say is it's a tough market and it's a volatile market. 5 o'clock in the morning, it might look like the futures are going to rip all day long and squeeze the shorts. 10 o'clock in the morning, we might be down 1%. 12 o'clock in the afternoon, we might be back to being up 1%, and then it can all fall apart. Madness, guys, I tell you, madness. But my game plan does not change, and as much as it sucks to sit here and watch things break down and not have money pouring in, I am not going to break my rules. My thinking is S&P 500 fires a weekly squeeze short. If Apple can fire a weekly squeeze short, and then Tesla fires a weekly squeeze short, I think we got plenty more room to the downside, and I'm pretty confident along the way we will get better entries for shorts, guys. So that is the only update I got for you now. Hope you all had a good day, and please let me know in the chat if any of you caught this short in Apple. That way I can live through you, at least for now. But I appreciate you guys watching. If you haven't already, go on ahead and subscribe, and we will keep rocking and rolling through this crazy-ass market. Talk to you guys soon. What's up, traders? This is Taylor from Focus Trades here with SimplerTrading.com, and as always, I appreciate you watching our videos. If you happen to enjoy this one, go on ahead and like and comment down below, and if you're not already, make sure you go on ahead and subscribe and click that bell icon. That way, whenever Chandler and I upload a video, you'll get a notification once it's live. And if you want to watch us trade live with our own money Monday through Friday, you can check us out at SimplerTrading.com. See you in the next video.